Boom, we're live, ladies and gentlemen. We have another wonderful podcast for you again today. We have Philip Swift from Decentrader. I think that's how I'd pronounce it, Decentrader, maybe a little more confluent with one another. We're excited to have another technical analyst on the show. Philip, drop in and tell us a little bit about yourself.
Hi, Tio. Thanks for having me on the show. It's great to be here. Yeah, Decentrader is perfectly good. It took me a while to get it right too. So I am a Bitcoin analyst. People might know me from Twitter. I'm at Positive Crypto on Twitter. So I trade and invest in Bitcoin, have done since 2017. But I also specialize in building tools that can help traders and investors time the market. So I guess in that sense, I'm a little bit different from your typical trader or investor because I build these sorts of valuation models and indicators that can help people analyze the Bitcoin market. And I share a lot of that on Twitter as well.
Okay, perfect. Well, let's drop in. If you can actually screen share your Twitter there, I saw we had it open before the call. Let's
Yeah, sure.
take us through down the rabbit hole, Philip.
Cool.
I
Right.
mean, yeah.
Yes. So yeah, this is me on Twitter, and like you mentioned, we have this project called Decentrader. It's where we have this community platform where investors and traders share our ideas and analysis. So in that community, and it's myself and another trader called Phil B, who some people might know. And yeah, we kind of share our analysis and thinking there and lots of tools. And today I'll share with you guys some of the tools that I find really useful in terms of giving me a bit of an edge in the market and share my perspective in terms of how I look at the market. But yeah, so this is Decentrader. There's a Black Friday deal still for a couple of days if people want to go and check that out, 30% off. So that is that, and you can read a lot more about it there. But yeah, so that's it really. I will show you lots of these charts as we go through, but essentially, if you go on Decentrader, there's loads of different Bitcoin live charts that update every day, that some of which are my own, some of which are other people's, and they can just help you understand from an investment perspective or from a trading perspective when it's good to enter or exit the market. So there's some stuff there that you'll recognize, like stock to flow model. I'm sure most people have heard of that, Plan B stock to flow model. So yeah, we've got that on there, and you can go and check that out, but that's just one of a whole bunch of charts. I'll just, yeah, so you can see it's there and it updates every day. So yeah, that is the intro. But if you're happy for me to keep going, I can just give you a bit of perspective on how I'm seeing Bitcoin at the moment and how I've been trading it the past couple of months.
Yeah, that's great. So like a lot of the Bear Family Mastermind group, because we have a private community as well. What a lot of us focus on is understanding market timing from what Wyckoff used in trading ranges, because it's been extremely helpful to build confidence, and it's very clear. So some of what I like about these other abstractions in analysis is that, you know, even the stock to flow model, right on the downside is, okay, well, if no one is buying it, that wouldn't make any difference. Just because Bitcoin's like how much it produces and like is a deflationary aspect of its mining doesn't necessarily mean the price is going to go up. It still needs the demand. I mean, it's just supply by itself is almost totally irrelevant. So when we're measuring supply and demand, we're looking at a kind of a conversation of human nature. So yeah, let's drop in. Let's take a look at Bitcoin and Ethereum, how you see it, because those are two of our big main trades. And then maybe we can go a little bit more conceptual about how we see just the broad market and where we might be going as well. So yeah, take us around what you've been watching. I love it.
Cool. Sounds good. Sounds good. And yeah, on that point you just mentioned about stock to flow, I couldn't agree more. That is a big question mark over that model. And I really believe that actually you never want to look at one tool in isolation. If you get obsessed by one metric or one tool, then you can often miss the wood from the trees. And so I always try and look at a whole mix of tools, and I sort of cherry pick different models at different times, depending on the market conditions. And I find that works quite well for me. But obviously, each individual needs to figure out what's best for them, really. And so that's why I put out lots of different indicators, and people can review them and pick whichever ones they see fit. So yeah, let's look at Bitcoin then. So in terms of Bitcoin, I've been really bullish on Bitcoin the past couple of months, since early September. And I thought I'd just quickly outline kind of how I got to that thesis. And what I'll do is I'll show you a few metrics, quite simple metrics from a technical analysis point of view on the charts. But then I thought I'd also go through some more macro stuff to show why I think we are very clearly in the early stages of a bull cycle. And then I'll quickly talk about where I think we might be going in the near term, in the next sort of couple of weeks.
I think it's one of the first times the entire community agrees on something. We're in a bull market.
I know, right? It's a good feeling, right? Because we've been waiting quite a while for that uniform agreement, and I think it's taken new money coming into the market, big institutional money coming in to get that alignment of from a perspective point of view. So yeah, it's great. It's great. It's a really good time to be involved in Bitcoin. Right. So yeah, so a couple of tools I just thought I'd walk through, some of which people may know about already, some of which they won't or may not. So I got very publicly bullish back here in early September when we had this pullback to around 10K. And there was kind of three main reasons, well, probably four main reasons why I got bullish around there. From a technical perspective, probably the simplest reason was the fact that price had come back to test this 128-day moving average line. So that is the orange moving average line you can see here on the chart. And that lines up pretty much, it's about the same as like a 20-week moving average for anyone who uses moving averages a lot. And historically in Bitcoin's bull markets, that has been a great buy the dip opportunity. So if ever price pulls back to that moving average, it can often be a very good buy the dip opportunity in bull runs. And I'll just show you, if we go back to the previous bull market in 2017.
Yeah, we've been looking at the 21 on log since the first automatic rally we had up to 13,000 after that $3,000 spot, because that's when we didn't touch that 21 on the log we were using. When it didn't touch that, that kind of signaled to us that it wasn't a healthy bull market that we were in, that it was an unsustainable move. So right now you're looking back in 2017 at this very similar cycle where you have a retest of either the 20 or the, I think, the 21 in the log is what we were using.
Yeah, exactly. Sorry, go ahead. Tia.
No, I was just I'm agreeing with you, and we've been watching this same areas of support too. So that's
exactly,
good.
Exactly. So yeah, we use that a lot, and it sounds like you do too, which is great, because it is a really good for someone who's just trying to understand the cyclical nature of Bitcoin. When you start to see things like that, it can be really useful. And then obviously you can scale up your understanding of more complex ideas and things like Wyckoff, like you mentioned, and other tools. So yeah, 21 week moving average, or the 128-day moving average, is something I'd certainly recommend to keep an eye on. And obviously, since we tested that level back in September, we haven't looked back since, and we've been on this crazy rally. Something else we look at is funding rates. So that's what this is down here. This is a free indicator. If you just go on TradingView, you can search for it. It's just the BitMEX funding rate. And what it looks at is the extent to which people who are long or who are short are paying the premium funding at that time. So the way that BitMEX works, it's not like a typical futures contract. It's a perpetual swap. And the way they kind of keep the price in check with price on other platforms is they make people who are long or people who are short pay funding to the other side to keep price broadly in check. And what is interesting with this indicator is that when it goes negative for a couple of periods on a daily level, and we're in a sort of bullish cycle, like clearly we are at the moment, that tends to be a pretty good buy the dip opportunity. So you can see here, back at the end of September and early October, this indicator was going negative below zero. And what that means is that people were paying to short the market. And when that happens in a bullish market, in a bull market cycle, that tends to be a pretty good indication that you want to be buying the dip. So that's something else that we looked at that gave us quite a bit of confidence that actually we were going to move quite strongly from this sort of 10K level upwards at the end of September.
Yeah, isn't it funny that the idea of buy the dip is really only a functional statement for when a bull market is starting? Whereas it's like as long as you're at the start of the bull market, you could probably buy every step along the way to the top of this thing, and you're gonna end up
Yeah.
moving up in the plus. It's such an interesting, some of these older adjuncts to like buy when there's blood in the streets, like these ideas of peak fear or mentality. So I've never used the BitMEX stuff. Do you think that it's as going to become less relevant as the CME and the potential of ETFs move into the future? Like, because I feel that there's so much institutional money here right now that we're starting
Mm,
to have a different relationship. Like, I'll pose it like this: I've been charting and playing with some of this stuff for the last few years as well, and I'll look at other alternative assets like, against Bitcoin. And this year, within the last 3 to 6 months, for the first time, I see all these other tokens that are significantly more relevant to the US dollar price as in comparison with Bitcoin. Do you think that the ecosystem has changed? Like, does BitMEX going down, does it make some of these other ways that we would generally build our strategies, are they changing?
yeah, I think is a really good point, and I think the ecosystem is massively changing right now. I think a large part of this run up, and I'll show you in a minute, is institutionally led. And I do think, therefore, the dynamics of the market will change. I think you're right. I think the influence of BitMEX is probably deteriorating at quite a rapid rate, actually. Having said that, I do think that this sort of sentiment, this is just one way of measuring sentiment, right? When BitMEX funding goes negative. And I still think there will be periods in this cycle when we have major pullbacks, which we will. You know, we're not going to go in like, as amazing as this run up has been since the start of October. It's not going to carry on all that way up to 100K. You know, there will be pullbacks, and I think even though that the ecosystem has changed in terms of the players involved, I still think the market psychology will broadly play out in that when we have pullbacks of, say, 20%, there will be fear, there will be blood, and I still think these indicators will be useful to an extent. So yeah, I think ecosystem is changing, but I still think they'll be useful.
Yeah, it's something interesting here too, is if when we're looking at this BitMEX funding index, you can see how long it took for the buyers on BitMEX to realize we were in a bull market. To see this
Yeah,
big spike up after November started of the longs taking place effectively, when it like we're maybe much more closer to the top of this potential move. It's almost
yeah,
like you're right. You're seeing the retail side of things here, not the big institutional money.
that's
I,
right.
I read recently that Jim Simmons in the Renaissance Cap started investing through the CME futures on Bitcoin as well. So we know those big players are here, and they're extremely sophisticated. They knew we were in a bull market a long time ago. I'm sure. I'm sure.
Yeah,
I'm sure of it. So to see this is much more a measurement of retail side of it too, which is I think an important part to note, which is that retail and well-skilled institutions act totally different. That's why they are able to make money off one of another, and usually institutions making money off retail effectively. Um, I like how this shows that at least in BitMEX you have a significantly higher amount of retail investors that are playing here because of how long it took them to
Yeah,
go long.
yeah, exactly. And I can show you a chart here which shows you the extent to which big players are still getting involved in the market. So this is a really simple chart. It's on over at Decentrader. It looks at the number of addresses that have a balance of over 1,000 Bitcoin within them. So it includes exchanges to some extent, but it also includes big players in the market. So huge whales and probably institutions as well who are buying up Bitcoin. And what you can see is that actually over the past, well, actually since the lows, right? So since we had that drop down, they have just been accumulating. And what's interesting to me is that even on this recent rise up, as Bitcoin has run up from the 10Ks up to 19K now, we're still seeing accumulation in terms of the number of addresses that have holding over 1,000 Bitcoin. So there's lots of evidence to suggest that big players are still holding. They're not cashing in Bitcoin right now, and more players are coming into the ecosystem. And another chart that I think is really interesting on this point is the extent to which we're seeing the amount of Bitcoin balances on exchanges deteriorate. So this is looking at the number of Bitcoin held on exchanges like Coinbase, Bitstamp, BitMEX, OKX, and since March, the COVID crash, you can see. Well, let me take a step back. Sorry, 1 second. If we look back at the previous, so there's two things on this chart. One is the price line, which is in gray. I'm sure everyone can recognize that. And then the second are these colored bars, which represent the amount of Bitcoin held on all those different exchanges. Now, what we saw at the start of the last cycle, so back in 2016, was the amount of Bitcoin held on the exchanges was rising, and then it started to deteriorate a little bit, started to pull back. And that was really people taking Bitcoin off exchanges in anticipation of the bull cycle. So they're putting it into cold storage because they were expecting higher prices. And then obviously we went on this huge bull run. Now, what we've seen this year is a really extreme version of that same phenomenon. So since the COVID crash, you can see that these colored bands have really deteriorated at a massive rate. And I think there's actually several reasons for that. So if you think about what's been happening the past sort of 6 months now, obviously we had the COVID crash. And if you remember, I'm sure anyone trading on BitMEX will remember, BitMEX nearly went down at that time. And loads of people got really spooked and took their funds off the exchange. And it was around that time also that Paul Tudor Jones first came out. So a big hedge fund guy said he was buying up Bitcoin. And then since then, we've obviously had other exchange scares like OKX and Huobi quite recently. And also institutions have been buying up Bitcoin. And what they do is they buy over the counter, they use up the reserves on the exchanges, and they take them off and hold them in cold storage somewhere else. So really interesting chart there for me that I think makes that point that you made earlier, Tio, about the extent to which institutions are coming into the market right now.
Yeah, it's a much different player too that understands these games more effectively. Like I think it's the difference too. That idea that the way the market is relating to itself has changed. Like it was so much clearer that Bitcoin versus Litecoin was the sentiment I wanted to trade back in 2017 was the relationships, whereas now you're seeing a much more US dollar priced point make more sense, which is a really weird shift to me, because I think it I think what that represents is these bigger funds like
Mm,
Renaissance, Medallion, these guys that are coming in with who are already used to making billions of dollars a year. Like they come
yeah,
into play because there's now enough liquidity, there's now enough high frequency trading for them to play in their own little ecosystem. So then you have Grayscale effectively chewing up such a massive amount to help provide liquidity for these CME contracts, etc. Like where do we close? Because it's all cash settled, right? They want US
yeah,
dollars. They don't want more Bitcoin, and that's one of these. I think that's one of the weird things that's changed about the market, is because it's lost some of its the altruism, and it's now, just Bitcoin's this money asset and we can trade it in high volume, which is amazing. Like, I'm very excited about that, because it means we have a liquid money market, which is fantastic. But
yeah,
it represents a big shift, I think, in the investor and how they think about the market. Whereas in the early days, the investors were altruistic about Bitcoin being the new money. Whereas
yeah.
here, these investors are like, oh, great, Bitcoin's a way to make more US dollars.
Yeah, no, I know. I have that torn feeling that it's almost in a way losing a little bit of its magic as it inevitably heads further and further into the mainstream.
Yeah,
So,
yeah.
yeah,
Side point there. I love these charts that you shared here, and I think it's important to recognize that first one you showed there about the level of wallets that were holding over thousands of Bitcoin, because it was mostly retail investors, people who could afford a few hundred or a few $1,000s of Bitcoin back in 2016, that kind of ultimately were some of the most successful, because you only had to spend maybe 10
yeah,
grand in
yeah.
2016 to come out and be like, yes, we're making
You could be
some.
yeah. It was much easier to be a whale back then, wasn't it?
The quality of the game has shifted, and I think it's an important shift. Although, yeah, as we had touched base on, it feels like it's lost some of its mystique because of that. Now it's just part
Mm.
of the system we had, not a new one potentially.
Yeah, yeah, exactly. But there's a lot of evidence that players or people who've been in the space for a long time are continuing to hodl, which I find reassuring in a way, right? So it's not like all the old players have run away and now it's all the bankers. We're not quite there yet, and I think you can see that on this chart actually, which is a really important chart, and I think shows really clearly just how early we are in this bull cycle. So I think we're all agreed and feel very confident that we are in a bull cycle now. But this data point, I think, shows us that we've still got a long way to go before we top out this cycle. And this is an on-chain chart. So on-chain analysis is when we look at transactions that are happening on the blockchain between wallets. And when you aggregate that data, you can collect insights and understand what certain players are doing at certain times, and therefore where the market might go in the future. Now, this one is called the 1 year hodl wave chart, and if you want to read about it, there's a description underneath on the chart, and you can find this elsewhere as well. If you just Google it, you'll find it. But what it does is it looks at the percentage of all Bitcoin in existence. You can see this scale here on the left-hand side, it's 0 to 100. The percentage of all Bitcoin that have been mined and are currently out there in the ecosystem, the percentage of those that have not moved from one wallet to another wallet for at least 1 year. Okay, so that hence the name 1 year hodl wave. So this orange line shows you the percentage of Bitcoin that have not moved on chain for at least 1 year. And at the moment, what you can see, obviously you've got price here, the white line, and what you can see is this inverse relationship between the two in a bull market. So price goes up, the 1 year hodl wave eventually goes down. And the reason for that is if we just look at last cycle for a minute. So this is, I'm looking here at 2016 on the chart. What was happening here was that a lot of people let's say it was us, we were in the market, we were hodling, we'd been in the market for a long time, we'd been buying our Bitcoin in the bear market, and we were hodling because we were expecting higher prices in the future. And so when lots of people have been doing that for a good while, this level is quite high, it was up at 60%. They were therefore anticipating a higher price in the future. When the bull market then accelerated, those people then began to realize their gains, and they would sell their coins, and therefore the Bitcoin would move from one wallet to another wallet, and therefore this percentage of Bitcoin that hadn't moved for 1 year would then start to decline. Yeah, and so as price went up, people realized their gains, and that meant that this 1 year hodl wave line decreased, and actually it bottomed at around 45%. And you can see this sort of cyclical nature of this 1 year hodl line, and it's obviously inverse to price. And so when you look at where we are right now today, we're actually still pretty early, very early in fact. We're still pretty much at this sort of level here where we were in 2016, because you can see that the amount of Bitcoin that haven't moved on chain for at least a year is still above 60%, even when we're racing up around $19,000 today. So that would suggest that we've still got a long way to move down, and therefore a long way for price to go up this cycle. And I think part of the reason for that is that a lot of people who've been in the space for a long time understand Bitcoin's market cycles, and a lot of people believe that we are going to go over 100K this cycle. And I think there's a good proportion of these hodlers who are just going to hold on to their Bitcoin until that happens. So yeah, I think we've still got plenty of upside to go in this cycle.
Yeah, I agree. Where we've been charting it is we're in the very first what we call a sign of strength outside of the box, effectively, which is just the first real show of, hey, there's no supply left, look what we can do. That's kind of all the big money playing, and then attracting retail effectively, right? The game is to mark the price up, because it's the best way to advertise that something's valuable, is mark the price up. So
yeah,
look, and then get everyone's attention. You know, I've had, for the first time again, you get people, everyone sharing multiple messages of friends and family members sharing cryptocurrency idea. Retail's starting to show up again, and that's generally what these markup cycles are for. But it's the first step out of the gate in terms of a run that could be, maybe, I mean, we don't know how crazy it could be. I put a rough estimate of between 100 to maybe 360,000, but also I'm very interested to see what they do at 80 grand, because a lot of these guys have so many billions. Like if you have a fund like Renaissance playing in here now, it's a wholly different ball game. These guys have the deepest of buckets to play with, so they might not be as interested in, say, 10x potential as they are like, oh, we got a 5x out of it. You know what I mean? And anyways, I've had a question of, here's I'll pose it to you as a question. Do you feel that as the market grows and these bigger players come in, that we'll see less volatility both to the up and downside, and we'll see a stabler, smaller growth period?
I think we will eventually, but I don't think we're there yet, is probably how I view that. I think we've still probably got a highly volatile cycle in us, at least one more cycle in us before that starts to happen. Because if you think about it, yes, people are coming in, but as we've just been talking about, we're still early in that transition. And I think as that transition happens, what you're seeing is people are scrambling to get into the space, and that is going to naturally create volatility. And I think it will create volatility in the sense that the institutions are scrambling to get in now. I think mainstream retail will then see that happening when we start busting through 20K, 30K, then they'll start scrambling in. And so I still think you are going to get that FOMO, and therefore natural market cycle and high volatility play out, at least, you know, in the next sort of 18 months. And then, you know, we'll naturally need to have a correction from there, because people will have FOMO'd in. So yeah, I still think we've got at least a couple of years of market cycle in us before volatility would start to settle down. I think price would need to be a lot higher before we get to that stage.
Well, let's take a look at something intermediary, because I think we both agree we're going a lot higher. How high? Well, let's wait till we get there to try to decide, because that's a much smarter way to go. In the short term, though, well, for the way we look at trading ranges here, or one of the way I look at trading ranges, I'm looking for these signs of strength and then these kind of supply and support tests. In the next, let's say between here and March, where do you think we peak out, and where do you think we retest for that final supply test on this moment? Do we touch that 20-week moving average again, like we did so healthily in 2017? Do we come back to test it, and this is just a show of strength for all the big players in the market?
I mean, it's getting a bit, for the first time in a long time, I'm finding it a bit tricky to call what's going to happen in the next couple of months. What I would say is that, and there's a couple of reasons for that. So what I would say is, obviously we've been on this huge run the past few weeks, and clearly there's institutions buying it up whenever we were having dips. So we were seeing that whenever we dipped down into the 12Ks here at the end of October. I have a couple of indicators that help show when we're getting overextended. One of them's called the golden ratio multiplier. You can, if you go on my Twitter, you'll see me talk about it, and you can go and read up about it. I'm not going to go through and explain it now, but what I'll say is that when price comes up to hit this red line here, in the previous cycle, that did cause us to correct a little bit. So when price started closing at a daily level above this red line or thereabouts, that red line, we did correct. So I am thinking in the short term, funding is now starting to trend a bit positive, but it's still not at crazy levels yet. So we could still go higher. So I wouldn't be, but I do think to the downside, to answer your question, at the moment, in the near term, I do think any dips more than like $1,000 or $2,000 are just going to get bought up by institutions, unless there's some kind of massive shock news event that I can't imagine what that would be right now. But
See,
yeah, so
part of me, we look back at 2017, the day we hit the top was the day that CME futures opened, and that these big institutions could go short. So part of what I'm wondering here, the market is really good at doing this, which is tricking us. It's like when we get to these highs, maybe we get a peak out to like 21,000, just like, oh my God, Bitcoin's never coming down. It's just going to go straight to $100,000 type of mentality. And then that's when the market turns around, because that's when it can take the most advantage of selling short on you and being like, yeah, just hodl through, just wait. Because we're gonna make a bunch of money on the downside. Part of me wonders is how these bigger players will use that shorting to the downside, because ultimately these real big institutions, they don't hodl. If there's a short opportunity to sell to the downside, they do, and they're really good at it. Well, some of them are, let's be clear, not all of them. Some of them are really good at it. Some are just lucky, I'm sure. But I guess the part of this is, I've, out of all the market study I've done, when you see these breakouts to the trading range, there's always a retracement. Now, these retracements are 100% for just accumulating more. So they're doing it to test supply, where I think that they'll go out and just dump on the market to see how low they can get the price to go, knowing that they're all like massively up. Like their other investments might not be doing that well, so they're interested in profits. So where do you, I guess, the 21 is down, or the 20 there that you have is down at 12 grand. Do you think we come that low? Because or is it in a cycle like this, we get it, if we're lucky, we get down to 15,000 as a new trading range?
Yeah, I think I'd be surprised if we get down this low. I think that's quite unlikely, to be honest, right now. I think what's more possible is that we perhaps do pull back from this red line at some point. We might go sideways a little bit. I mean, even if we started falling down from here, we'd have to fall down pretty damn quickly. And remember, this 128-day moving average, or your 21-week moving average, is rising at quite a rapid rate. So it could quite easily get to like 13, 14K by the time price comes down. So I think that would be my absolute rock bottom low, around this level here where I have the orange line, because that's also the June 2019.
Yeah, the broader trading
high.
range.
Yeah.
Yeah, we've got that there too as well, around 13,000.
So I think that would be the ultimate low, and yeah, I mean, it would have to be something quite unforeseen that I can't foresee right now. But like you say, when the market is pushing up so high and everyone is expecting things to go much higher, that tends to be when we have a rather nice correction. So absolutely, you know, it's as long as it is above this 21-week moving average, or the 128-day moving average, we're still in a perfectly healthy bull market, right? So we could easily pull back down to there. So yeah, I think you know, I was talking to Decentrader subscribers around, when Bitcoin puts in these moves like this, just do not get carried away with leverage. It's so tempting to kind of get carried away with leverage, but the market can really catch you out, because Bitcoin can easily pull back $2,000-3,000 in a day and not even blink. So
yeah,
and people can wipe out their accounts. So
yeah, the SOSs, or those signs of strength, are for leaving the positions that you entered in leverage when we were down near 11 grand.
yeah.
Philip, you know, lately because of the conversation we're having about maybe some of the altruistic aspects, at least why I joined this space well, so I bought my first Bitcoins at $90, but I didn't understand it then. But when I fully understood it, it was like $1,000. I bought at the high, and that's when I started to learn how to trade also. But I joined because it was like a free choice money. Like it was a more like the internet. There was this altruistic open source mentality that really drew me towards it. And it's kind of lost some of that allure. But lately, through the euphoria of Ethereum, I've been feeling Ethereum give me the same kind of like feeling, like it's given me those like early day feelings that I have with Bitcoin, of what I liked about it. Not just there's potential for making money here, but it's doing something really unique. How do you feel about Ethereum lately?
So I have to say, I am not as clued up on Ethereum as I am Bitcoin. So Bitcoin is like my main thing, and it's my expertise, and you know, build models for it. Ethereum, I think, is just I think it's a fascinating thing and kind of project, but I don't have as in-depth knowledge, I would say, about Ethereum. But that's not to say I don't trade it. I do trade it, and I think some of the things being built in it are incredible as well, and I expect it to do extremely well over the next 18 months. I just can't talk as confidently on the intrinsics of it and fundamentals of it as I can on Bitcoin.
Yeah, no, I mean, I can't either. I don't know anything about the code or the tech really. It's just it's this conceptual feeling that I get about it, where like, okay, Bitcoin's our money, and now here's how we build everything else that money needs, right? Because money needs a bunch of other tools in the toolkit. Like you're trying to build a workshop. You're like, okay, well, I need all these other things for my toolkit, and Ethereum seems to offer that. I guess maybe not fundamentally in the conversation, but what about technically? Where do you think we are technically in comparison? And as you've been building models for Bitcoin, which are fantastic, by the way, I wanted to point that out. That what you guys have on Decentrader there is fantastic. Are you can you build stuff like that for Ethereum? I know there's more like blockchain analytics, this type of thing.
Yeah.
What type of and anyways, just give me your rough thoughts on the technical aspects of, even though you're not as focused on as much, but we're
sure. So I think in terms of building models for Ethereum, I think the challenge, because I get people all the time like messaging me saying, hey, do your indicators work on your valuation models work on altcoin XYZ or Ethereum? And I have to say, no, I don't think they do. And I think for the moment, I think the reason why they don't so well is because they are still, in a way, in the gravitational pull of Bitcoin. The Bitcoin like price is still controlled a lot of the rest of the ecosystem, and that may be starting to change now. We might see this cycle that a divergence in that, as Ethereum might go and do its own thing, but until recently, that's certainly been the case. So it was much harder to apply those models to specific alts because they were being so heavily influenced by Bitcoin. So that's just to answer that question in case people were wondering
Yeah,
about
great.
that.
Yeah, I agree.
In terms of technically Ethereum at the moment, let me just turn off Predator for a moment, and then I'll turn it back on in a second. So I mean, I think Ethereum's starting to look increasingly great. We can see. I'm just trying to see these levels. Yeah, exactly. So we're up at resistance right now. Actually, that's how I see it technically, which was this key level here from June 2018. So you can see we're up at this support resistance level now, and we hit the top of it, and we've just pulled back. However, I am bullish on Ethereum, and I do think at some point in the coming weeks we're going to make a run up to this $800 level, which will be that first major bounce high from the bear market back in May 2018, which feels like a lifetime ago now, doesn't it?
Yeah.
But yeah. So yeah, I think Ethereum. We're going to have to see what's going to happen. I think it might be largely dependent on Bitcoin in the next week or two. We're just having a bit of a pullback now in this resistance area, but I am expecting us to take another leg up to $800 soon. That's going to be my next bullish target that I'm looking at for Ethereum. But yeah, I think it looks good, and I am generally expecting us to have some kind of, whether you like to call it an alt season or not, I'm expecting Ethereum and altcoins to do well in the coming months. So I would say sort of like Q1 next year.
Yeah, one of the things, so one of the other ideas about what Wyckoff put together that I really like was this idea of comp man, this kind of insidious character who's just made like a century-long profession out of taking money away from you.
Right. Okay.
And there's this aspect where uh, the markets are kind of designed to make you like, unless you can go against your human nature, which is like, you don't look for a girlfriend who's like down low and like you don't look for like an undervalued girl. You generally try to, or a partner, right? You try to find a partner that's like got their shit together, like it's
Totally.
green candles all the way, right? Where the market is really, you have to go against this human nature to look for something that's actually what it is at that moment, and recognize it when it's less valuable. And this is one of the things I think that, what's interesting about the altcoin space is that comp man, this idea of this character who invests in something like Bitcoin, actually almost invests in everything, because they're smart enough as investors to know that they don't actually know what the long-term success of a niche like this might be. So they start to invest in a lot of different things, just to kind of to hedge, to make a diversified portfolio. They invest in, or Compman invests in a whole array of things that people would call shit coins. That, I mean, I had no idea what Chainlink is, but obviously it's valuable. Like, it's the market said it's valuable. I didn't need to, like, I don't need to degrade it to see that Bitcoin and Chainlink are actually more valuable together. And that's one of the weird parts of that conversation, is that these are not altcoins. Effectively, Bitcoin's more valuable because of Chainlink. Bitcoin's more valuable because of Ethereum, as far as I can tell. That you have this ecosystem that does function together. Anyways.
No, I totally agree with you, and I'm certainly not a maxi, and I think that line of thinking is well, it's very narrow-minded, and I think this ecosystem as a whole is just growing at an incredible rate, and I think Bitcoin helps the altcoins. And I think what you're going to see this cycle is altcoins just go off, or certain altcoins just build up like sub ecosystems on their own. Like I'm personally think DeFi is really interesting and exciting space, and
Hell yeah.
I'm bullish on quite a few projects in that space, and have been. Um, in Decentrader, we've been talking about a lot of those like Yearn, Link, Aave. I think they're going to do great this cycle, and I'm holding some of those, and yeah, I think if you want, we could take a look at Link now quickly.
Yeah, I don't want to interject too much because I agree with you. But the sentiment around DeFi, when we're watching these cycle shifts, like the movement between, say, Bitcoin and the rest of the sector, DeFi has been the most respondent out of
Mm,
everything. Like with Wi-Fi, like with Aave, there's a few others like Uni as well, where the rebound is orders of magnitude higher than what Bitcoin does on that same
yeah.
moment. So it kind of hides its growth. Well, well, obviously Bitcoin's going through a bull run. You're still seeing these massive recoils. Like it was like 150% from the bottom of the Wi-Fi token. Um,
Yeah, exactly.
yeah. So
Exactly.
the
Yeah.
DeFi sector obviously has something has something going for it.
Exactly. And I think if you're an investor in the space, you do well to just keep an open mind, right? And I just think there's so many opportunities and so many people much smarter than myself doing amazing things on these projects that I want to go along for the ride. And I think there's some incredible opportunities out there. And yeah, DeFi is definitely one of them. Um, and yeah, it's one that we've traded a lot. We were trading it back in August to the upside, and I think there's a couple of neat little things that you can keep an eye on for Wi-Fi that I'll just show you actually. So I'd noticed that when we were in this uptrend back in August. So I'm just looking versus USD at the moment. I normally trade altcoins versus BTC, but it's a bit cleaner if I show you this point on the USD chart. What you could see is that every time we came back to tap the 128 period moving average on the 4-hour chart, which essentially works out as the 20-day moving average, price would just rally really strong off it. You can't see it all the way here, but it did it down here as well. And then you can see it did it multiple times here, rallied. And then when we finally, in September, we fell below it and couldn't break above it. That was when I was saying, oh, hang on, guys, I think in the short term, we're probably entering a downtrend here. And you could see how the price just couldn't handle being below that moving average until we had that final capitulation back in start of November, wasn't it? When we rallied pretty hard. And then since then, what's interesting to note is we've since broken above it, retested it, and then we've been moving on up. And as well as that, we also broke above this downtrend line here, which I think was an important downtrend line. We retested it and we've rallied since. So I think, yeah, projects, certain DeFi major projects like Yearn look really strong actually at the moment, certainly in USD terms, but even versus Bitcoin, it's still painting a broadly similar picture that we'll obviously have to see how strong Bitcoin is over the next few weeks.
Yeah, that was one of the big changes I had to get used to the last few months was the DeFi sector, and part of the way the new investors have are building here. It's about US dollar somehow. I don't know when that shift happened, but it somehow came with the DeFi sector that
Yeah,
it's
yeah.
built. it's built more around stable coins and its relationship to Bitcoin from the stable coin than just
Totally.
Bitcoin itself, where it was all trading against Bitcoin before. There was no real US dollar pairing that had a massive amount of liquidity. Now you have liquidity all across the board, because of the automated market makers and all this stuff, and it shifted to US dollar pairings very quickly. I was like, whoa, okay, I gotta change style now. So let's take a look at Link, because I think Link is just in its final
Sure.
areas of reaccumulation as well.
Yeah.
That Wi-Fi one there, that spike down, the stopping action was very noticeable in the volume on that too. We had some, I wasn't in that trade because I was playing just with Ethereum out of the backup phase, but there's some they do some very noticeable things sometimes. So let's take a look at Link, because I think we're right in the final stages of a kind of a breakout moment. And I
Yeah.
guess
So
a question here is, because you're looking at it Chainlink versus Bitcoin, let's maybe look at both Bitcoin and US dollars, and kind
hmm
of create some conjecture around the difference
hmm
between both of these charts now.
Sure, totally. So I'll start with Bitcoin because that's how I normally look at it, but then we'll take a look at the USD version as well. So Link, I think, is a really interesting technical chart actually, and this is how I've had my view of it for like months now. I certainly wasn't an early adopter of Link. I wish I was. I got to it pretty late. But what I've noticed is that, and I'm sure I know I'm not the only one who's noticed it, but Link for a long time now has been in this channel. So you can see the orange channel, and it's been moving up and down that channel. And what happened back in late August is we spiked up above the channel. And I was saying on Decentrader that I think we're a bit overcooked here because it had broken so violently out of the channel, and to expect to go back in. And that's kind of what's happened really. And we've actually tapped really beautifully the bottom of the channel back in at the start of November, which is actually that same point that Yearn capitulated. And since then we've tested the channel, but are now working our way from the bottom of it. And there's also two pretty key moving averages that I look at for Link as well, versus the BTC pair. And that is the 200-day moving average or the 200 exponential moving average. So they're pretty similar, but what you can see is that Link likes to tap those moving averages and then rally up off them. Sometimes it capitulates a little bit underneath them down to the bottom of the channel, but you can see it's done it several times. And what we're seeing right now is that we had a capitulation below them, and right now in the near term, if I just zoom in, price is trying to figure out if it can reclaim it or not. So it's a really interesting moment right now for Link. I'm personally bullish on Link on long time frames, so weekly time frames, and I think it's putting in a pretty good effort here at the moment to try and reclaim both of those. And if it can do that, then I would expect probably a bit of a movement up to this resistance area of sort of, what is that? That's kind of like just short of the 100k sats level. And then I think if we can reclaim that, then we should be good for more upside. But that's kind of where I think we might go next if we can confidently stay above these moving averages.
Yeah, I think it's around $16 on the VPVR if you on the US dollar pairing.
Okay, let's have a look at the US dollar. Link USD. I'm not sure if I'm going to have anything painted up on this. So yeah. So there you go. Yeah, just over $15 at the moment. Yeah, so looking good. And I think a lot of the DeFi majors and a lot of alts generally, to be honest, are looking strong versus USD. So yeah, if you trade the USD pairs, I think you've got a great, couple of quarters ahead of you, because I think we're now in a really bullish cycle. The challenge will be for people who are trying to trade versus Bitcoin, if they're trying to accumulate more Bitcoin trading alt pairs, just trying to figure out if they can outperformed Bitcoin, which has obviously been very bullish of late.
Yeah, this is something. This is what I normally always chart in the BTC pairing, but since the DeFi sector showed up, almost to the days it started to show up, there was for me at least, there was a big shift in between the relevance of the Bitcoin pairing and the US dollar pairing. And I wonder if it's because of all these new perpetual future swaps, options contracts that don't really have anything to do with Bitcoin that make again, we're using this idea of we have stable coins in the market or something, which is
Yeah,
provides a whole nother hidden risk, but
yeah,
it seemed to become much more relevant. I'm wondering if, yeah, again, I'm still trying to like ascertain what that means for the rest of my analysis, because I would always say only chart in Bitcoin because it's the alpha of my portfolio. And if I'm not charting in Bitcoin, I don't know if I'm playing properly. And there were months and years where the patterns played out beautifully. And this is the first time I've really seen this sentiment shift since the beginning of August, where everything makes more sense in US dollar pairings. Like, oh, that's gross. Like, that's not, I don't want to chart in US dollars, but there's just these beautiful technical patterns that have started to perform there. I think especially in the DeFi sector. Like I've never once looked at Wi-Fi versus Bitcoin because it made less sense. Whereas in the Wi-Fi versus USDT pairing, I'm like, oh,
super
okay,
clean.
this makes,
Yeah,
yeah, exactly.
yeah, yeah, yeah. Super clean charts when you look versus USD. So yeah, I totally agree with you. I mean, yeah, you're right. It's all the stable coins getting locked up in these protocols, and yeah, a lot of the lending, it's all in USD. So it makes a lot of sense, and it is going to be very interesting to see how that ecosystem interacts with Bitcoin and whether it interacts much with it at all. Right, at some point, maybe DeFi just goes off and does its own thing, which would be really exciting to see.
Yeah,
Uh,
if it seems like we've got our money, it does this one thing. I bet you most people that will use it in the future may not even ever know they're interacting with it. The level of like the ease of use when I first started to try the automated market makers, where you can trade pretty much anything for anything, right? Because you can trade it for a wrapped Bitcoin if you want, and then you have to unwrap that Bitcoin from the Ethereum network. But the Ethereum network has built rails that allows Bitcoin to move faster without ever having to mess with Bitcoin. Like one of the ideas was, okay, we've got something that's valuable, we know it works, it can store value, so how do we build with it without messing with the one thing it needs to be good at, which is basically security, and holding that, retaining that value, like no hacks or no losses, etc. So it seems like Ethereum is building new rails for Bitcoin to operate even more efficiently than it has, because if you can wrap a Bitcoin through the Ethereum network and through proof of stake and all the stuff, you can send Bitcoin and it costs nothing. Then basically, then it's
yeah.
you've created you've usurped the idea of, oh, it's too expensive, it's too slow. Okay, well, great, we'll just run Bitcoin on Ethereum then.
The space is moving so fast. Like it's like a full-time job just to try and keep up with all the developments. And with DeFi, I spent weeks back in July just trying to understand it all, try and keep track of all the projects. I think if you can do that, the rewards really do come, because it's such an exciting space. And I think we're going to see a second wave. In fact, we're already starting to see a second wave with DeFi, but that's certainly where I'm going to be spending a good chunk of my time in terms of research over the coming weeks and months.
Yeah, we feel that same sentiment. So what, just I guess to finalize the conversation, just really quickly, give us a few of the DeFi projects that you think are interesting. And then lastly, try giving us some ridiculous Bitcoin price target so I can make some flashy thumbnail that says Bitcoin to $500 million.
Oh, okay, sure. I'll try my best with
Just being
that.
playful there with you.
No, I know. It's cool. I'm just, I'll pick an indicator and we'll have a go at that one. So DeFi, I think that I'm certainly, there are so many exciting things out there, but in terms of holding projects through what I see as probably like a cycle that is going to last a few months. I just want to play it fairly safe, I suppose, if you could call these projects safe. So I am broadly sticking to the DeFi majors. So projects like Yearn, which we've gone through, like Aave, like Synthetics, like Uniswap. But then there's also other projects like Hedgic, which I'm not sure if you're aware of, but it's like a decentralized options exchange.
Yeah.
I think that's really interesting because, and I spend a lot of time in the space. So whether it's in Telegram groups, on Twitter, in Discord channels, and it's just interesting to see the usage of these projects amongst different players. And I have started to see, or I started to see a few weeks ago, quite big players in the space start to use Hedgic. So I think that's a really interesting project that I can see growing quite quickly. So yeah, I like that one too. Yeah, like I say, if people aren't aware what that is, it's an options trading platform that is decentralized. So in the same way that you can go on something like Deribit and trade Bitcoin options, you can do that in a decentralized way, albeit paying quite high fees at the moment using Hedgic. So I like that. That one's interesting. And then, yeah, I mean, you can see I've got a whole bunch of stuff here, most of which I'm not in at the moment, but it's just stuff I track. So yeah, I'd say those are probably some of the key ones I like. And yeah, it'll be interesting to see how the old cycle coin, what I call old cycle projects perform, because I think everyone's discounting them at the moment, like thinking they're just going to go off and die. So what I'm talking about is coins that have been around a long time. So like in the 2017 era. So whether it's, you can see I've got a whole bunch of them here in blue. So like basic attention token, Litecoin, obviously, Ripple, all that sort of stuff. I think people were ruling them out. And actually what you can see, well, quite a few of them are green today. But I do think some of those like Zcash will probably finally turn around. I actually think it might have already put a bottom in. So that's one to keep an eye on. So yeah, there you go. There's a little selection of things I'm keeping an eye on at the moment.
Awesome. Yeah, I think it's important just to keep an open mind, like you said at the start of this, is that there's so much going on so quickly. And because the macro here is tech, which is a big abstraction in our space, because it means, well, it doesn't have to make sense. Like the DVD was obviously not as good as the Blu-ray, right? But when there's a community that builds around something and the community grows, then this becomes the accepted standard. It's like, well, that's what it is. That's basically what happened with Bitcoin too. There are a number of other things that are like technically a little better, but here is the community stake their flag, and now you have this production. So it doesn't have to make sense logically. So having a broad spectrum investment approach where you just limit investments, understanding how volatile these can be and that you might get it wrong. It's easier to have that long-term perspective of like, okay, well, I'm going to invest in this, just limit your cap size. So let's finalize. We'll go with some crazy Bitcoin price prediction, and
let's have a look then. Let's have a look. So what can I choose to help me with that crazy prediction? Let's look at, you know what, I'm just going to pick this one. This is like the simplest indicator or valuation model we have. It's one that I made. I wanted to build a model for Bitcoin that like someone who has literally been in Bitcoin for 5 minutes can understand. And it's more from an investment perspective than a trading perspective. And so I just called it the Bitcoin Investor Tool. And all it does, it has Bitcoin price, the white line you can see there, and it has a 2-year moving average of the price, which is the green line. And then it has a ×5 multiple of the values of that 2-year moving average. So if you look here, okay, let's find it at $10. So when the green line, the 2-year moving average is $10, the red line is going to be ×5 of that, so like $60, right? What happens when you do this and you plot it over the entirety of Bitcoin's history is you can see very quickly that It picks the depths of the bear market in green. So that's obviously fantastic times to accumulate your Bitcoin if you get the chance. And then it also, the ×5 multiple of those values, the red line, when price breaks above that in its final blow off top stage in each market cycle, that is obviously a good time if you're a long-term investor to cash out some Bitcoin, to realize some profits. Obviously, none of this is investment advice. I'm just saying that this is how this indicator works. So off the basis of this, if we look at what's happening at the moment, what we can see is that price has obviously rallied up, and I do think we will get some kind of correction at some point over the coming weeks, even if it's just a couple of $1,000s, or if we just track sideways a bit. I don't think we're just going to keep racing up in this sort of vertical fashion over the next few weeks until we hit that red line. It's just not that early. We're too early for that to happen, I should say. So what I think will happen is we'll have a couple of pullbacks. Meanwhile, what you can see is that this red line is now starting to trend up, and it's actually going to start trending up quite rapidly, as you saw last cycle when price tried to catch up with it. You see it starts to move up very quickly. And I suspect that by the time price catches up with that red line, it we're probably going to be, I would say, probably not a million miles away from what you were saying earlier on, Tio, actually, around $80,000. And I wouldn't be surprised if we get some kind of correction around that level before then finally breaking through and having this sort of blow off top finish like we've seen in all the other market cycles before. And I think when that happens, I think we'll blast through 100K. And I actually think we'll be somewhere, I would say between 150K and maybe 210K. That's the area I'm looking at the moment. And obviously, there's a whole bunch of tools that can help us when we get a bit close to the time to see if that's sounding about right or not.
Yeah, brilliant. Yeah, in my mind, I've always thought, somewhere between 80 and 300,000. just
Yeah.
just based off because I remember in 2017 when we were watching Bitcoin move up the first time again from like 400, 600, 800, and then through that $1,000 mark, like the breakout past the high, I'm like, okay, well, 10 grand is in sight now. But as soon as we started moving and we hit closer to 8, 9, 10, I'm like, oh, this is. We're not near the top yet. There's this moment where that you get that blow off top. Now, when you were showing that full cycle there, it looked like the blow off tops were becoming a little like, it looks like 2017 versus 2013 there.
A bit less versus these.
Yeah, it's less it has less of an like a breakout. At least the like exponential growth over top of it, like back in 28, 29 there, the first one, it goes almost perfectly straight up, and then it seems to get I mean, it's too early to tell, but part of me feels that we might have less of a blow off top, so maybe not 360, but somewhere between 100 and 100 something, 200 something seems very, very possible.
I think you're right, and I've noticed that exact same thing that you've just mentioned, and I think what we're seeing is this. So the price chart, the price line, when you look at it on a logarithmic scale like this, you can see it has this broad arc shape, and that is essentially the adoption of Bitcoin happening on like a price chart. And you can see it's reducing over time as Bitcoin gets adopted, and to your point earlier on, as I think over time the volatility will decrease to some extent, versus these early days where the volatility was absolutely insane, right? Because it was just a few people pushing the price around crazy levels. So yeah, I do think maybe the blow off top won't be quite as high this time, but even if it's not, depending on how long it takes us to get there, it could still be comfortably in the plus 100K region, maybe even a bit higher.
Yeah, and now you have such a higher level of sophistication in the funds that are playing, that are used to going short, as with the opportunity to do so, just like they had at the end of 2017 there. They take advantage of it, and they may take advantage of it even earlier than we'd suspect, because they're like, well, we're up so much, sell short. Fascinating.
Totally. Yeah. So I mean, it's just a reminder, isn't it, to it's it's a tricky one because you want to hold on as long as you can, but you also, well, I also feel I need to take profit at some point along the way. So hopefully we've got a bit more, a few more indicators and tools that can help us along the way this time around.
Yeah, absolutely. I think it's a lot easier to recognize the stability now, whereas in 2017, who knew? Like, it just
Mm,
felt so, it felt abstract. Somehow it feels like we're earlier and we're more mature somehow. Like we've showed up to that, we've showed up to
yes.
the same dance, more mature but younger. That's fantastic. Um, well, Philip, this has been a pleasure. I love what you've put together here with all these charts. Again, for me, my strategy is just to keep it simple. I'm measuring human emotion. Are we in a
Yeah.
fear state or are we in a euphoric state? We're right at the beginning of the entry into euphoria, basically. So I think we've got a fun 18 months ahead of us. We've got a very similar time frame. We've got a similar price outlook. And when you have more ways not to confirm your bias, because that's always a difficulty when
Mm,
you're charting, right? It's so easy to be like, oh, I'm just going to kind of shove this thing in to fit what I want it to do instead of the data that it's actually giving me. When we have more ways to look at, okay, well, are we overextended? Where are we in the, especially these larger market price cycles too, I think are so important. Recognizing that this is, even though we're looking, I'm sure we both like looking at the 4 hour or the 15 minute just to see what's going on in the markets. It's really about that bigger picture that gives you the ease of, okay, we're in a bull market. You could literally buy Bitcoin every day since March and you will be on the plus side maybe for the next 18 months. It's not investment advice, but this is the easiest time to be successful in the market because you literally just,
yeah.
all you have to do is buy. And as long as you're not buying with leverage, and well, because then you have to know much more where you are in the 15-minute, etc.
Yeah.
Then you've got a really easy potential 18 months. And if you get to that life changing wealth moment, or for yourself, whatever that might be, that's the time where, okay, well, it's time to readjust the portfolio here. Philip, thank you for sharing all this stuff. For those that want, you've got Steve, you can decentrader.com. We'll share their Twitter and all their links down below. I look forward to it. We've got a bull market right ahead of us here, Philip. So we'll keep in touch, and I hope I want to say flib, but I know it's like filb. I don't know, FILB, I believe.
Say it however you want it.
Mm.
I'm not even sure myself, and I've known him for a long time, but no, it's Phil B. Phil B.
Okay, Phil B. See that? See, that's just easy. I don't know. It's something about the meme world of the internet language of like, it's Philb, it's Philb. We're going with Philb. um, I really appreciate this. Again, check out Decentrader. Follow him on Twitter. You guys have a YouTube channel as well. And
Yeah.
thank you for sharing this stuff. I appreciate it.
Thank you. Well, thanks for having me on the show, Tio. I really appreciate it, and it was really good fun. I enjoyed it, and enjoyed chatting with you as well. So thanks very much.
Yeah, my pleasure. When we get back near the top again, we'll jump back in and see if we can call the top together now, because we're at the basic, we're still at the bottom of the bull market. So let's
Sounds good.
rehash when we're near the top or maybe the middle again. We'll have a glass of orange juice.
Sounds good. Sounds good. Thanks a lot.
Awesome. Thank you guys. Thank you, Bear family. Remember to give us thumbs up if you like this content. Leave any of your thoughts, your questions, your comments down below. We'll be able to help you guys out if you have any of those. And then again, thank you if you've made it to the end of the video. We really appreciate it. That's Philip, we just did like an hour and 20 minutes. That's
Whoa.
fantastic. Yeah, we're able to have a great chat. So thank you guys, and we'll see you again on the next episode.